If you're a veteran getting ready to use your VA loan, you need to hear this before you sign anything. One of the biggest VA specialist lenders in America has been accused in a lawsuit of steering veterans and using marketing that felt more official than it really was. And whether that case goes anywhere or not, that headline should make you pause. Because this isn't really about one company. It's about your VA benefit and how it gets marketed. And how easily it can be monetized if you don't understand how this system works. You've probably seen all the mailers. They look very official. They look urgent. They use bold VA language. They may even feel like something straight from the government. And most veterans think, well, they must be connected to the VA, so it's okay. That assumption is exactly why this conversation matters. So let's clear something up immediately. The Department of Veteran Affairs does not lend money. They guarantee loans. Private companies originate them. Every single one. So when a lender builds their entire brand around looking like the VA lender, that branding power influences trust before you even ask a question. Now, I'm not here to litigate a case on YouTube, guys. But the allegations reported involve veterans claiming they were steered and that marketing implied a closer relationship with the VA than actually existed. And that's pretty serious, guys. Not because it's dramatic, not because it highlights something bigger. I mean, veterans already struggle to know who is truly aligned with them and who is just really good at advertising. If we haven't met, my name is Emmett Dempsey. I'm a former U.S. Army officer, airborne, a VA homeowner myself. Licensed mortgage broker, I'm a member of Better VA, and I've sat on both sides of this table. As a veteran using the benefit, and as a professional structuring it for veterans. So when I talk about protecting your VA loan, I take it personally. And early in this video, I want you to know something important. I created a free VA lender red flag guide. It's linked below in the description. Even if you never work with me, use that guide when comparing lenders. Because most of what I'm about to explain is not something you'll hear in a 10-minute sales call. Let's start with why this matters financially. Because 0.5% difference in rate over 30 years on a VA loan can mean tens of thousands of dollars. A slightly higher cost structure that you don't recognize can quietly increase your total cost of borrowing without you ever realizing it. And if you never compare, you never see the delta. Red flag number 1 is identity confusion. If a lender leans heavily into appearing like they are the VA instead of clearly stating that they are a private company offering VA loans, that should trigger a question in your mind. You'll see government-style seals, official-looking envelopes, urgent formatting, language that feels authoritative. Ask this question every time. Are you a part of the Department of Veterans Affairs? The answer should be a clean, immediate no. Negative, ghostwriter. If it isn't clear, that's information. Red flag number 2 is steering. Steering doesn't always look obvious. It can sound helpful. I mean, you should really use our preferred agent. We work best if everything stays in-house. It could get complicated if you use someone outside our network. That sounds efficient, right? But what it does is consolidate control. Your lender's job is to finance your home, not control your agent, your title company, and your entire transaction pipeline. You see, I've had veterans come to me after being told they weren't truly pre-approved unless they used the lender's preferred agent. That's pressure disguised as convenience, and it really happens a lot with builders, guys. And convenience often has a price. Red flag number 3 is cost opacity. This is the expensive one. A lender can tell you, we don't charge lender fees. But if the rate is higher, that profit can be embedded in pricing that you never see. If you only look at the monthly payment, you won't see it. If you only look at one line item, you won't see it either. You see, you have to compare total cost. And most veterans just don't. That's just facts. Because they assume a VA loan is a VA loan is a VA loan, right? It isn't. Now, let's talk about structure differences. A big national direct lender operates on one pricing sheet, one internal structure, one set of overlays. A broker like me can access multiple wholesale VA lenders, different pricing structures, different credit tolerances, different underwriting interpretations. That flexibility matters, especially when your file has nuance. Every veteran file has nuance, guys, and it just does. They're not one size fits all. So you have disability income, BAH, variable LES structures, reserve components, PCS transitions, and those details are not generic. Another difference is incentive alignment. A call center loan officer may be measured by volume, speed, conversion metrics. A local broker like me, I live in the same community as you. While our reputation is local, if we mislead someone, that shows up at the grocery store. At youth sports, I coach flag football. In veteran circles, that creates a different accountability structure. So here's a simple 3-step framework that you can use. Step 1, strip away the branding. Ask clearly who they are. Make sure you understand you are dealing with a private lender. Step 2, get at least 2 written breakdowns, side by side. Total cost, rate, fees, credits, everything. Not just a headline payment or an interest rate. Step 3, test their reaction to comparison. Tell them you're comparing with a broker. Watch the tone they give you. Confident professionals welcome competition. Insecure ones attack it. Now let me address a common objection. All lenders are the same. They're not. Guidelines, overlays, they just differ. Margin structures differ. Investor appetite differs. And sometimes even underwriting interpretation differs. The VA benefit is standardized. The companies offering are not. Another objection. Big companies must be better. Big companies have bigger ad budgets, guys. That's it. It doesn't automatically mean better structure for you, the veteran. It means stronger brand recognition. And here's something almost nobody explains clearly. The VA benefit itself is powerful on its own. But if you structure it incorrectly, choose the wrong pricing model, or don't compare, you can still leave money on the table. So that's why I created that red flag guide. Because confusion benefits advertisers, not you. Clarity benefits veterans. Okay, now let's zoom out for a second. You've earned this benefit, guys. You didn't earn a marketing funnel. You earned one of the most powerful home financing tools in the country. And I know, because I do a lot of different loans, this is definitely the best. 0 down potential, no monthly mortgage insurance, flexible credit structure, competitive rates historically. It deserves intentional use, not panic decisions, not pressure, not blind trust either. And again, not every big lender is bad. Not every broker is perfect. This is about awareness. This is about control. This is about making sure you are choosing, not being guided by branding gravity. Okay? If you're currently shopping for a VA home loan or already have a quote, download the guide below. Use it line by line. Even if you never speak to me, which I hope you do, particularly if you're in Florida, Georgia, or Texas. If you want a second opinion, my team will review your quote and tell you exactly where it stands. No pressure, veteran to veteran. And before you move forward with any VA lender, you need to understand something else. Even if you choose the right company, you can still use the VA benefit incorrectly. There are myths veterans still believe that cost real money over time. So in the next video, I break down the 5 VA loan myths veterans still believe and how to avoid them. Choosing the right lender is step 1. Structuring the benefit correctly is step 2. Go and click on that video now, right here. I'll see you there.